On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning all. Let's look back on last week. A pretty good one for global shares. The S&P 500 in the US up 0.4%, the second week in a row of gains. Europe was up 1%, the FTSE 100 in the UK and the Aussie market both 1.4% higher. The local market didn't follow suit. Our NZX 50 index slipped 0.2% actually. Bond yields fell back slightly. We saw conservative assets find some favour again after an extended sell-off that saw bond yields hit the highest levels we've seen in years. So the 10-year Treasury yield did fall last week from 4.8% at the end of the previous week to 4.6%. It's hit a 16-year high over the last 10 days or so. In New Zealand, the 5-year swap rate fell back as well, fell 13 basis points to 5.2%. That had hit its highest level since 2010, the previous week. If you want to know more about global bond yields, why they've been going up, whether it matters, what you need to do about it, if anything, I did record something last week that you'll find in the back catalogues. Go and have a listen to that podcast episode to get some more detail. Oil prices, they rose 5.9% last week, closed at just under $88 a barrel. They were quite soft the week before. I think they fell 10 or 11% the previous week. So although last week they rose in response to the conflict in Israel, they're still pretty much in that trading range that has prevailed for the 6 weeks leading up to that attack. So we haven't seen oil prices really break out at all. We'll be watching for any signs of escalation, further escalation that could impact prices more significantly. But to date, even though what we're seeing over there is horrifying, frankly, from a human perspective, we haven't seen a huge reaction from financial markets. But if you are interested in knowing more about the sorts of things we need to think about and keep an eye on, I recorded a podcast episode on that too last week. So go and hunt that out and have a further listen. Events from last week, well, the election was the key one, and again, recorded an episode on this just yesterday, so you can find something standalone there with some extended thoughts. But long story short, lots of surprises. Really good showing from National, good showing from the Greens, from ACT. Not so good from Labour. They'll be really disappointed. Te Pāti Māori had a very good showing as well. So when you boil it all down, National and ACT on these preliminary numbers do have enough seats to govern, but only just got the slimmest of margins. And I think what that means is that Winston Peters could still find himself in the mix because the special bit votes are still to come. We've also got the by-election in Port Waikato, and you've still got a couple of close races between Pāti Māori and Labour, and it could lead to things shifting around a little bit and overhang seats potentially. But the big one is probably the special votes, because in the last couple of elections, the special votes have definitely favoured the left, and in 2017, 2020, we've seen National lose 2 seats each time to 2 of the left parties. So if they lose any seats, then they don't have a majority, and New Zealand First will be called upon. So still a bit of water to go under the bridge, and it could be a little while before we actually know what the government looks like precisely. So that's very much a watch this space, but the National Party will still be very happy with the outcome. The housing market, we had some new figures last week from the Real Estate Institute. Further evidence, the slump is definitely over. House prices are rebounding. Sales volumes higher year on year. The days to sell lower. Prices up for the 4th consecutive month. The rebound hasn't been significant, but looking fairly well entrenched now, a modest rebound, which I think is good for confidence and sentiment. Offshore, it was the US CPI that was the key release, and this came in a little hotter than expectations. The headline CPI was where it was a bit stronger, and it was largely due to higher rents, which is interesting because there's been other surveys which have pointed to rents coming down. So, it could just be a bit of an anomaly. It's only 1 month's data, it might be a bit of a watch this space, but the annual inflation rate at a headline level, same as August at 3.7. People thought it might come down a little bit. The core CPI, which excludes food and energy, that was in line with the expectations. That did come down from August, came down from 4.3 to 4.1. That is sitting at the lowest in 2 years, still far too high, but definitely coming in the right direction. We've got 2 more Federal Reserve meetings, I think, this year. So there's one in mid-December, but there's one before that, I think like the last day of October and then the 1st of November. So it's not too far away. We'll get a couple of other inflation releases between now and then. The PCE report, which is a really important one. But at the moment, markets see very little chance of any change to the Fed funds rate, which is sitting at 5.5%. That's their equivalent of the OCR. Current pricing suggests that we won't see any change, but that's a watch this space because things can obviously move around as new information comes to light. Looking ahead on the local front, apart from obviously the reaction to the election on Monday morning, we will have some quarterly inflation figures. These are out, is it Wednesday or are they out on Tuesday? Tuesday, I think, aren't they? Quarterly inflation figures, and this will be for the September quarter, September 2023. So if we think back to the last inflation report, we saw headline inflation fall to 6% annually, still far too high, but that was the lowest in about a year and a half. The detail wasn't so encouraging, though. All of the weakness came from the tradables inflation, which is imported inflation, and the non-tradables inflation, which is reflective of domestic pricing pressures. That was much higher than people were hoping for. So we'll be watching for any difference in the detail this time around. For what it's worth, the Reserve Bank is expecting the headline CPI at an annual level to be unchanged at 6%. Markets, which is sort of, economists out there, there's a couple of economists that expect it to be higher, but generally I think the average is for it to come in the high fives, 5.9 to be precise. However, when you look at the economists' forecasts for tradables versus non-tradables, they're still expecting non-tradables to be quite high. So I'm not expecting any great news on the inflation front this week. I think the numbers will still look much higher than we want them to be, and I don't think we're not quite at the point where we're actually seeing inflation come down to the degree that we want. Dairy prices will also get the results of another dairy auction. These will be out early on Wednesday morning, and we've seen a good rebound of late. Dairy prices hit a 15-year high in March last year, and then they slumped 47% from that point to mid-August, which saw them at a 5-year low, the lowest since 2018. And since then, they've staged a small recovery. So since mid-August, the headline index up about 12%. That's just over 3 auctions. That actually prompted Fonterra to increase its forecast range for the dairy payout from a midpoint of 675 to a much more respectable 725. So good news to be back in the sevens, and let's hope that we see dairy prices push a little bit higher again. China will be in focus. They've got their third quarter GDP figures out on Wednesday afternoon, so these probably won't look fantastic. Things have stabilized in China from an economic perspective, but there are still a lot of challenges, the property sector and so forth. So we'll be watching these numbers to see if they give us any clues about how things are tracking right at the minute. And we will get some activity indicators for the month of September, retail sales, industrial production, those sorts of things. So they might also give us some evidence about how the Chinese economy is tracking. The Federal Reserve will be in focus. Like I said, there's that Fed meeting coming up at the end of this month, and they'll very soon go into their blackout period. The blackout period is in the lead up to those meetings, and they're obviously not allowed to speak publicly because they're in that zone where they start to give us too much information about what they may or may not do. So this week is sort of the last week that they can get out there and speak publicly and openly. And I think we've got about 8 of the 12 regional Fed presidents and 6 of the 7 board members due to speak at various events. So there'll be lots of Fed speak, as they call it. And the most important appearance will be that of Chair Jerome Powell. He is speaking at the Economic Club of New York, and that is on Thursdays. That will be really interesting because even though we aren't expecting any movement from the Fed at the next meeting, we did have that inflation report that I mentioned last week and also the most recent jobs report that were a little bit stronger than expected. So it'll be interesting to know whether those have changed things for Jerome Powell and the Federal Reserve. The last time we heard from them, they really did try and shift the debate from how high will we go in terms of interest rates to how long will we keep interest rates elevated. So they have taken a bit of a turn in terms of the rhetoric, but just be interesting to see whether that some of those strong economic indicators and higher inflation readings have caused them to reevaluate those views. So that will be something we're watching. There's also a lot going on the corporate calendar. Obviously, the international reporting season kicked off last week, so we had JP Morgan and a few of the other financial heavyweights beginning the quarterly reporting season. This is obviously for the September quarter, and there's quite a few more to come this week. I think there's about 55 S&P 500 companies set to report. So Goldman Sachs, Johnson & Johnson, Netflix, Procter Gamble, Tesla, something for everyone. Next week will be even busier, but this week we will get plenty of names from major companies reporting. It's not just in the US. You'll see plenty of European and UK companies and companies from elsewhere also reporting results. L'Oreal, Nestle, Rentokil, Roche, TSMC. So there's plenty of companies across the world that will be reporting results, and this will give us a good feel for how the economic environment is tracking, how consumers are behaving in terms of spending, what sort of impact higher interest rates are having on all of these corporates, and whether there's any let up in cost pressures or demand or any of those sorts of things. So lots to watch. There's also a few annual meetings on the local front. I think we've got Auckland Airport, Tourism Holdings, across the Tasman there's a few. Telstra, BHP got a quarterly release, Transurban got an AGM, Cleanaway an AGM. So there's a few things to watch, including Fletcher Building coming out of its trading halt this morning, Monday morning. It will resume trading when the market opens at 10 o'clock. So all eyes will be on Fletcher's to see, in all honesty, how far the share price falls in the wake of the news last week from that Australian company that some of Fletcher's products are not working as they should. So still a lot of uncertainty around that, but markets will be very interested to see how bad the reaction is for Fletcher Building. So there you go. Plenty to keep an eye on. Another exciting week ahead. Thank you for listening, and we'll talk again soon.